Hello and welcome to our viewers on cruxinvestor.com and also to our listeners on Cruxcast, our new podcast series. We're here today with Patrick Downey. He's the CEO of Orezone. How are you, Patrick?
Good. Very well, in fact.
Fantastic. You're over here in London.
Yes.
What are you doing?
Well, we're actually telling the story. We're right in the middle of construction on the project. We're meeting investors here, talking to some of our existing investors, some new investors. We're also looking at talking to some of the banking groups here, you know, on the debt side. We're going into that stage in the next 6-8 months, so keeping them up to date with the project. So it's really just an information session.
Right, okay. So why don't you give us 2-3 minutes on the company and then we can kind of get into that.
Orezone, based in Burkina Faso. We're on the TSX Venture Exchange. Most of the guys who've worked with the company, we've been a long history of success with developing and sometimes selling merging projects, sometimes building them. It just really depends. The project is in the advanced stage. We're building the oxide project, which is a very simple free dig, no drill and blast, no explosives, no crushing, very simple project. And we're going to release an updated feasibility study in June of this year, right, which will incorporate the high-grade sulfides, which is the harder rock beneath the oxides, which will add about another 700,000 ounces of recovered gold. So a very robust project. We're doing it in stages in that way because it's less capital intensive, so we don't have to raise $200-300 million, which for a junior is extremely difficult. And it's also it mitigates the risk in terms of the development of the project. So it's a sort of a stage type.
Right. So why don't you tell us a little bit about Burkina Faso, because obviously not many people know much about gold in West Africa. It's a very prolific area. You know,
yeah,
what body are you in?
So Burkina is, yes, in the past 10 years they've built 12 mines. There's 2 more being built right now, one about 8 kilometers from us, in the same district. Great jurisdiction from a mining point of view. From our point of view, what I've seen is really a lot of the skill sets that if you're going into a more development side of country like Africa, you have to bring in a lot of expats. Now in Burkina, maybe 2% of your workforce will be expats. So a lot of the guys, the accountants, the lawyers, the metallurgists, the geologists are all local people. Infrastructure, it's landlocked, so logistics is always something.
So explain to people where you are.
Right in the middle of West Africa. So we're north of Ghana, we're east of Mali, we're east and south of Mali, and we're west of Niger.
So you're on that perfect like greenstone
belt,
the tip of it anyway.
There's 2 major greenstone belts run through us. So we're on the sort of more eastern one, quite prolific from the point of view of assets, or sort of world-class size assets.
So tell us about that. What are the names? What are the resources?
Well, right beside us, I mean, we've got West African. So I would say if you drew an arc of 10 kilometers, there's 3 deposits. One's owned by B2 Gold, one by West African, and then ourselves. There'd be 10 to 14 million ounces right there, which in Nevada, that would be a district. Just to the north of us is Bisa, which has been going for 15 years, about 140,000 ounces a year, very prolific one. And then just further north in the same belt would be Essakane, which is 300,000 ounces a year, been going for 10 years. Right. Got about another 15 years of mine life. So you're seeing those sort of world-class type of deposits.
And a lot of developers there too as well, so building out their resource like you guys.
Yes, we've got, you've got Endeavour very ensconced in the country. You've got Semifo there. You've got Rox Gold, which are a junior, very successful junior. And then there's lots of smaller exploration companies in the area. Some of them have just been bought up. Semifo have just bought up one beside them. Orbis Gold was about 6 hours to the east of us. It just got bought about 4 years ago and built by Semifo.
Yeah, so there's a lot of activity in the area. It's very prolific.
Very prolific.
Got it, so we can tick that box. Now, tell us a little bit about the team very quickly.
Well,
in terms of their relevant experience to what you're trying to do.
So The general manager in country was the general manager of Rocks Gold, so he built the Rocks Gold team. Myself, I've been 35 years in the mining business. Built a number of projects in Africa, but also developed a number of projects, probably more well known for Viceroy, where we had a project in Argentina, sold it to Yamana. Then had a project in Brazil, which we sold to Vale for. It's been built and up and running. That was an $800 million investment that was very successful. I had recently sort of stepped out of the business, retired. I was on boards, and Dalradian, which was in the north of Ireland, just been bought by a private equity company. Claude, which was just bought by Silver Standard, and Victoria Gold, which is now being built in northern Canada. I stepped into this project because I really saw an opportunity to fix something, and I thought it was being pushed and developed in the wrong way. Took it over. Brought in a couple of guys that I've worked with in the past on the management side, and now we're developing.
So tell me about that. So that's really interesting to me. So you've identified an asset where you think, well, that could be working more efficiently. So what were the things that were wrong, and what are you doing to fix it?
They had a complicated flow sheet that we thought we could simplify, which we've done. Their capital at the time was about 260 million. We brought it down to 140, so there's 120 million. Of the same sort of production profile. That caught the attention of a number of these very mining-focused private equity groups. And then,
so when was this?
This was about a year and a half ago.
Right, okay.
And one of them came in. It's a Resource Capital Fund, probably one of the RCF, one of the preeminent mining groups. And they stepped in and put in $35 million into the project.
Which is what in percentage?
They own 19.9.
Right.
And they're very supportive shareholder.
And very technical.
Very eight weeks of due diligence.
You got there.
We were very comfortable we would get there. We were happy they did the due diligence because it's that seal of approval. They then become a partner with you. It's been a very, very productive relationship with us. They have a good technical team. We bounce ideas off of them. Sometimes when you've got consultants and they've got we have to do it this way, and I'm going, well, maybe not. We bring a RCF in as a group that does a review for us and with us alongside us. So
right, because this might be time to talk about some of the other numbers involved in terms of market cap, etc.
Yeah, well, so we're market cap right now is about 100 million. I think there's been a bit of a downdraft in the junior stock. One of the things that's affected us, as we took over the management of the company, we let a number of key guys go. They had a lot of options, so they're selling them now. We know they are. But we're happy to pick them up, but that's been a bit of selling pressure on us. But the key to having an RCF there, they don't worry about the short-term share price. I do, my job, but they look at it and say, look, we love the project, we know it's a mine, we're behind you all the way, we're here for 8 to 10 years, it's going to get done, don't worry.
So that's the market cap. We know you've got some cash, gives you some optionality in terms of choices. How many more institutional players are there in terms of percentage held, and what's retail?
We've got a fairly big concentrated institutional shareholding. That's always generally been the way with me. Institutions will step in. Van Eck, which is not the Van Eck fund, it's actually the group itself, they own about 6%. They bought in the market at the same time as RCF did. We've got another big fund out of New York called Equinox. They own 11, and Sun Valley own 13, 14%. Another very, very technical American mining fund. Right.
So okay. So that's interesting. So, but you're here in London.
Yeah.
You're telling the story to institutions here as well. Are you going after the retail audience as well? I mean, how does that affect the liquidity, volume traded?
I think the retail market is something that is extremely important. We have a decent retail market in North America. We really need to build it over here and other places, because when you look at a junior company, particularly today, the passive funds don't pick us up. I mean, it's got to be the generalists, and it's got to be guys who understand it. The retail people who see value, they are the guys who really we want to attract to this story. So if the retail investor, who are very diligent about this, if they look at who's buying the stock on the retail side, it's management. Me, my chairman, my VP corporate development.
Yeah, we've seen your
so
you're active.
We are active because we know what we're building here.
Right. Okay. So that leads me to ask. I've got to ask, what would you have done differently last year, looking back?
Maybe done a bit. You know, we got a little complete when RCF came on. Okay, we got to focus on this, and we did, and we had to put the right team together. I think I would have been a bit more proactive in the retail market, and I probably would have brought a few more guys into the story. There was an opportunity to do it then.
What more guys? Like strategic investors?
Yes, strategic investors.
Right, okay.
Yeah.
Right. In terms of what you can't bring another RCF in. So when you say strategic, you mean what?
Well, you can't bring another RCF in, but there are groups who will come in along. But when RCF come in, there are groups of people who go, oh, if they're in, I want it.
E.g. Van Eck, etc.
Correct.
Right. Okay.
And they would have taken maybe a bit more at the time. We're very well financed, but I think that it would have been maybe a bit, not prudent, but I mean, good to bring in another $10 or $20 million. And from a point of view of where is the market today, you'd have less worries on that regard. So that would be the only thing. But I think that we also probably needed to get our story out to the retail side of things a bit stronger.
Well, true. But I guess this leads to my next question, which is you've got to get that balance between running the company and mitigating all that risk, all the moving parts, and driving share price. Because ultimately that's what you're judged on, right? And it's probably how you're remunerated. So yeah, there's a lot going on there. So how do you get that balance? How do you get that focus?
I think we definitely looked at how we were going to make sure that we had de-risked the project. I mean, we're a very technical team of people. We've been involved with a lot of successes. Even like when we have sold projects, everybody who, the Yamanas who bought it, the Silvers, they're all been very complimentary about how good the project was at the end of the day. They've all done well. If shareholders stuck with it, they did well. So we really bared down on de-risking the project. In country, we spent a lot of time, when you're in Africa, particularly in mining jurisdictions like Burkina and Ghana, there's a lot of, you have to move people. Yep. You have to do it right. You have to do all that corporate social side right. Yep. We ensured that we had that on track, that everybody understood the game plan, understood how we were going to do it. Most people just start building the houses and get going and move people out. We took it as, okay, we're going to build some, we're going to show you exactly what we're going to give you. Everybody was over the moon about the type of houses that we were building. So that social license just kept building and building. So we de-risked all of that. And I think I'm very happy that we've done that.
Yeah, I mean, that's got to help with the Minister of Mines.
Yeah, and they're actually going to do an official opening of the RAP, which is quite unusual this week for us.
Interesting. The gold.
I love it.
We all love gold, but the price this year, it hasn't reacted the way it normally would under normal circumstances. It's been it's not come up as much as people thought it would this year, given what's going on in the world. What's going on?
Well, if I knew that, I would sit home and trade gold all day. But look, everything's got a cycle and a life. I mean, the gold price is a little bit range bound with the US dollar, but if you look at the stock markets in the world, you look at what's happening, there's got to be it can't continue to go to the moon. It's not going to happen. If you look at the risk out there with currencies, where is your best bet? You have to own gold. It's always been true. It always will continue to be true.
That's the safe haven argument, right?
Yes, and that safe haven argument will always have a...
But does that apply more in India, Far East, than it does in North America, Europe?
If I was in Europe, I would be owning gold.
We thank you, Theresa May.
Yes, correct. And I would be owning gold. And
why'd you say that?
Well, how do you value the euro currency? I mean, it's really difficult.
How do you value the dollar? I mean, they're over $1 trillion in debt. Come on.
Correct. $1 trillion in debt. So much of that is owned by, correct, other countries.
Yeah.
If things start to go difficult.
Well, Russia have been dumping.
Well, and will do.
Treasuries.
And will do. And they will do. if you look at what happened with quantitative easing, where has that gone?
Yeah.
It's when you're issuing debt and buying it back for yourself, it's going to collapse at some point.
The Fed has some questions to answer about the policy, but again, it doesn't seem to have made things move the way it would have done, 10 years ago.
Yeah, I still think that the fundamentals of what was happening 10 years ago still exist today, and eventually that will turn. I mean, it will turn fast. I mean, look, the secret in commodities is if you want to sell high, you got to buy low.
Right.
And
you're going with that argument. You're saying this is the right time, markets at or near a bottom, values right now.
Correct. And if you look across the sector in commodities, that's where it's at, particularly in gold. And you look at other equities in the world, etc., they're all at all-time highs.
Well, I think uranium would argue with you.
No, I'm talking about all-time high, other equity, not commodities.
Oh, equity.
Right. Yeah.
Okay.
Look at where they're at. Look at where the world equity market. I mean, it's got to turn. So we're at a low. If you're smart in this business, we don't all make money by buying high. We make money by looking at the fundamentals, looking at the price, and going, "I'll buy now because maybe I have to wait a year, but I'm going to make money doing it."
We're all long-term, long-hold contrarians at heart.
But always remember, take some money off the table. When it gets high, take some money.
So, bigger question, on that topic, which is, do you think mining is still a relevant investment class?
Has to be. Where does everything come from in the world? Cell phones, Walmart goods, Amazon.
Yep.
You either grow it,
yep,
or you mine it.
Right.
It does not come from anywhere else. All these lovely teenagers who don't want mining, and they're on their cell phones, that satellite that's in the sky, God didn't put it there as far as I know. I think it was launched up there. Everything you have, and the world is not getting smaller, it's getting bigger. Population is growing. Everybody wants everything. Eventually, we will have to pay the price.
Do you think mining's done a good job? Do you think you've done a good job at explaining to people why these commodities are essential for our way of life?
I think it's, with a certain audience, they listen. With another younger audience, they tend to think that it's a dirty word, and which is really, really frustrating. I mean, I've been in the mining business 35 years. I would not have a different career. The changes that you make in people's lives, the infrastructure that you introduce to countries, done right by the right people, it is one of the most satisfying and rewarding businesses in the world. And you change people's lives, their education, their healthcare, their infrastructure, everything about it is a better way of life. And have we done a good job of selling that? We're doing a better job, but I think we could do more. We could do more about what truly is driving the world.
Right. It's a big topic.
A
Probably
huge
one
topic.
for another time, because I'm not sure too many people understand how to communicate to the marketplace. But let's come back to the company. So you've got a great institutional investor base, I'm hearing. You want to drive that the message out to a new retail audience. You've got some in North America. You're looking at Europe, UK, Europe, Northern Europe, as a supplement to that retail base. What's your message to them? Why you versus the next gold company?
I think with us is, number one, it's the team of people, their track record in the business. We are generally pretty good guys at picking projects and developing them. We put our money where our mouth is. We always go with our shareholders. It's not we're not doing this because we're pulling a big wage. We're doing this because we are equity holders. The big one from my point of view is looking at the risk. There's hundreds of thousands of meters of drilling done on this. We've de-risked it from a geological point of view. It's a very simple mine plan. It's the oxides, average depth of the pits is 45 meters, very shallow, free milling. great jurisdiction from the point of view of developing mines, so no political risk of are the government going to do this. There's always risk in Africa, there's risk in Burkina, but there's risk all over the world, but the technical risk is low. It's not a huge capex, so you look at people who are developing a project that's going to take 500-600 million, where are you going to get the money from? You're going to need a partner.
True.
So we look at it and say, low risk, from a technical point of view, very technical team behind it, a great shareholder base, including one of the biggest mining funds in the world behind it. Short time frame to production. This is not there's no exploration risk here. And then you get the re-rating when you get to production.
For sure. But I guess, do you feel that you're suffering from the Africa discount syndrome at the moment?
Yep.
What stage do you need to get to when that discount goes away?
Great question. I think that you have to get it to the point where your finance is in place. That takes a big
finance for what?
To build.
Okay.
So that's a de-risk, and it definitely helps. Then once you're in the build stage, I personally think, if I was looking at this, that West Africa is absolutely ripe for consolidation, and you can see guys moving in that direction.
Yeah.
Endeavour did a fantastic job of it 4 or 5 years ago.
Yep.
They were in the same stage as we were. Their price per NAV was 0.4. Now it's 1. Why did they get it? They executed and they did it well. There's 5-6 single asset mining companies out there. It's got to happen.
So is that the game plan? Is that would that be, you can't say that, or
no. It's never the game plan. But my job,
it's going to happen.
My job as the CEO of the company is to ensure my shareholders get full value for their investment.
Right.
Is that by building? Is that by selling? We'll determine that at the time. What I won't do is look at executing on a transaction before we have the sulfide update in the market. Once people know the true value, the interest in the project I know will grow. We'll decide then, is it best to allow someone else to build it with their cheaper cost of capital, or is it still best for us to build it? We'll make that. We're pretty savvy guys. We know how to. We'll do it at the time.
Been there, done it before. Well, Patrick, thanks very much for your time today. Loved hearing that story. It's new to us and our viewers. So do stay in touch.
Will do.
We'll
Thank
see
you.
Soon.
All right.
Thank you very much for watching our video. We do aim to give you informed and intelligent information with which to make your investment decisions. So if you liked what you just saw, please give us a thumbs up. And if you want to see more insightful, in-depth, honest and unbiased interviews, then please click the subscribe button. So thanks again for watching, and we look forward to seeing you again soon.